Welcome back, Turning Hard Times to Good Times. I'm your host, Jay Taylor, and I'm really pleased to have Adam Taggart with us once again. He is the founder of Wealthion YouTube channel. It's a very popular channel. I think there's something like, a lot of subscribers there. I can't remember the number, but it's grown well over, I think, 160,000 or something like that. Adam has been on this show a couple of times in the past. He has a great background, a strong educational background, having degrees from Brown and Stanford. He's worked on Wall Street with Merrill Lynch. He is also very much a great educator, which is why he's doing so well with his Wealthion YouTube channel in helping people understand the markets. You know, average people that don't have time to be in this stuff day in and day and night, all the time, 24/7. But his guests are among the best in the world, among the best independent thinkers in the world. And I think his Wealthion YouTube channel, if you haven't checked it out, you certainly should do so. So with very little time, I want to welcome Adam right away. Thanks for joining me today, Adam.
Yeah, it's a pleasure to be here, Jay. Let's see if I can live up to that very nice introduction you just gave.
Well, I have no doubt that you will. And if you don't, we're going to have people tuning into your channel because it's just incredible. Your guests are just great, but more than that, I think you're a great interviewer, and I think that in my mind you're as good as Charlie Rose. Let's see if you can live up to that. I don't.
Hopefully Charlie Rose minus the sex scandals.
Yes, I wasn't thinking about that. I'm not putting you in the same in that category at all, Adam. I don't know you personally that well, but I don't suspect that you are. Anyway, enough said. What is your subscriber count now? I think I was losing track. My memory isn't so good at age 75. But
you were in the ballpark if I round up. We're at about 100, almost at 156,000 subscribers on YouTube right now. We've been around for a little bit over a year, so we have seen a lot of really good growth in that time. And as you said, Jay, the purpose of the channel is twofold. It's to give regular people access to the insights of the world's top experts on money in the markets. So I interview these great independent thinkers that you were mentioning, and then we try to help people. We try to put their insights into regular speak so that average people can understand them, and then we try to, when we can, give people actionable solutions to go consider, because information by itself isn't useful unless you actually put it towards something, right?
Yeah, you do a very good job a lot of times with the technical jargon that you ask the guests to, or you clarify yourself what in fact they're talking about, so that people can understand. So just tell people before we get started here, where can they go to sign up? I can get on your mailing list for Wealthion, and they can be advised as to who your next guests are, right?
Yes, if they get on the mailing list every day, we do 5 to 6 videos a week, so almost every day, people are getting an email with the latest video that we put out. But the company name is Wealthion, and that's spelled Wealth ION. And if you want to actually see our videos, probably the best place to go is youtube.com/Wealthion. And if you want to subscribe there, it's free. YouTube will alert you every time we put out a new video.
And you do have some services or pay-for services. I think you just had a conference or two that people can sign up for as well.
We do. It's actually highly rare that we do anything for free. Highly rare that we do anything that costs money. We structured the company so that we could give away almost all of the content for free almost all of the time. But twice a year, we do a big event where on a single day, we get a bunch of speakers together and they present, and then they field live Q&A from the audience. So we just did that a week and a half ago. And shameless plug, if folks are interested in purchasing the replay videos to that, they can just go to wealthion.com/conference, and you can see all the speakers, you can see the agenda. And if that's something you like, well, then you can get those replay videos.
Excellent. Thank you very much for that. Well, let's focus on the markets then, which is what you do mostly on Wealthion. One of the first people on my show to suggest that Chairman Powell would not be pivoting monetary policy anytime soon was David Stockman, because he said that the Fed is scared to death about the populace coming after them with torches and pitchforks. Then soon after that, and more recently, you have had some discussions with Danielle DiMartino Booth, suggesting that Chairman Powell was likely going to hang tough against pressures to kick the can down the road one more time to alleviate the pain that was bound to follow this tough monetary policy. And more recently, I saw an interview. I actually did see an interview, thanks to your interview with Danielle, in which she interviewed another person that you've had on your show, Lacey Hunt, a former senior Federal Reserve economist who seemed also to suggest that the Fed was bound to stand firm no matter how much pain to bring inflation down. Do you think, have I characterized the views of both of those, both Danielle DiMartino Booth and Lacey Hunt correctly in your view?
You have, yes. And actually, another shameless plug, Lacey was one of the speakers at our conference the other weekend. So I actually have got some very fresh perspective from him. For those that don't know Lacey, he's a incredibly respected economist in his own right. He was a senior economist for the Federal Reserve for many years. He knew people like Milton Friedman and Paul Volcker personally. He now runs a very successful bond fund. But Lacey has long been concerned about the deflationary problems that we face. And I've interviewed him for years. That's always been his big fear. Now he has changed his tune slightly. Not that he's still not worried about the larger deflationary issue, but inflation has come to the forefront. And he's basically said the Fed's priority number 1, 2, and 3 right now has to be getting inflation under control. And knowing people at the Fed personally the way that he does, he is quite confident that that is their priority number 1, 2, and 3. Danielle, who also used to work for the Fed, she was an advisor to Richard Fisher at the Dallas Fed. She believes that Jerome Powell is lashed to the wheel the same way that Lacey thinks he is, but that Powell's objective right now is to basically negate the market's faith in the Fed put. For the past decade plus, the mantra for most investors has been, hey, don't fight the Fed, right? The Fed's got your back. If anything bad happens, the Fed's going to step in. They're going to, basically add enough stimulus to get things goosed back up again so our losses will turn into more gains. And the market is still at this point, at any chance it can get, especially even as we're talking, Jay, the markets have jumped 6% since yesterday's open. They are still pricing in a Fed rescue here. And Danielle thinks that the market is holding on to a false hope here, or maybe understandably, it's holding on to a hope that the Fed has trained it to have, but now Powell is trying to untrain it.
Yeah. It's just really difficult, in my view, to know which way it's going. But what it seems to be common here with Danielle and Lacey Hunt and David Stockman as well, they're all pretty well, at one time or another, were connected to government. And David, of course, was always a fiscal conservative, I would say. It didn't go along with the supply siders in the Reagan administration. I was really, frankly, quite shocked when David said, talked about the torches and pitchforks and that they're really afraid of that. I guess the pain of inflation, when you think about it, inflation, hyperinflation especially, destroys everything in its path, and almost everyone in its path. So you could understand. I just wonder if maybe to a certain extent, this is getting a little bit ahead of myself perhaps in what I wanted to ask you, a different viewpoint to all of that, of course, comes from people like Alistair McLeod and Simon Hunt. They're sort of the opinion that we're going to see demolition of the currency, that in fact Powell and others won't be able to stand firm no matter what. Do you think it's possible that the Federal Reserve, people like the chairman, for example, might actually see what Alistair and Simon Hunt are seeing, the possibility of a demise of the U.S. dollar and a chance of losing the U.S. losing dollar hegemony?
I think so. I'm gonna speak for Alistair and Simon, which is a bad thing to do. I don't think the Federal Reserve officials see it as dire as perhaps Simon and Alistair do. See the U.S.'s situation specifically as dire as Alistair and Simon do. And a big part of that is Brent Johnson's dollar milkshake theory, and I'm guessing you may have had Brent on your show before, Jay, and if you haven't,
I have not, and I would like you to explain the dollar milkshake theory, because I'm not familiar with it. It's one of a few of your shows I haven't seen.
Okay, and for me, this has been probably the most explanatory framework for me personally in understanding how 2022 has worked out. Mm-hmm. But basically, it's that economic trouble generally manifests, worse outside the U.S. The old expression, if the U.S. Gets the sniffles, the rest of the world gets pneumonia.
Right.
And so many companies, right now with the strength of the dollar, we've seen it's been a juggernaut versus all other fiat currencies so far this year, right? I mean, the Japanese yen's down something like 40% versus the dollar over the past year. The pound is basically almost back to parity, which it has hardly ever been in history. The euro is now 1-to-1 with the dollar. And one thing to remember is we worry about the Federal Reserve increasing its balance sheet and increasing the supply of the domestic currency base. Right. But what most people don't understand is that there is a whole other market of dollars out there in the world. Mm-hmm. It's called the euro dollar market.
Yes.
And it's poorly named because it really means dollars that are held outside of the U.S. It's not just specific to Europe. And those dollars are created similar to how most dollars are created inside the U.S. They're actually created by the banking system when a foreign bank makes a loan to another foreign entity that is dollar denominated. Mm-hmm. And what happens is back to sort of when the U.S. gets the sniffles and the rest of the world catches pneumonia. When we start having a global slowdown, when we start having trouble in the global economy, it's the weaker players that feel it first. These weaker players usually are borrowing in dollars on the euro dollar market. And as they start struggling to repay their debts and their debts start potentially going into default, it creates a global shortage of dollars, and it increases the demand for dollars, which further pushes the price of the dollar up on a relative basis versus other currency, which then actually makes these players even weaker, because if they've got to repay their dollar-denominated debt and the dollar is strengthening, well, they need to get more of their local currency to convert into dollars to pay that back. So it begins to kind of create this vicious cycle. And so as the global economy and financial system begins to get rocky and global markets start to weaken, well, then capital starts fleeing for safety. Right. Mm-hmm. And so you have the dollar going up versus other currencies, but you also have capital going out of the rest of the world into the U.S., seeking either A, better returns, or B, just greater safety, usually parked in long-dated treasuries. And so getting back to your original question, I think perhaps, the loss of the loss of the reserve currency status is not at the top of the list of the Jay Powells of the world. Mm-hmm. They're much more concerned in the short term about, one, getting inflation under control. Like I said, that's sort of priority 1, 2, and 3 for them right now. Mm-hmm. The other risk or threat that they have in their mind, though, is financial instability. And that risk is beginning to grow here. And essentially what that means is the Fed can tighten, but it has to be careful how it does it, because if it tightens too much, too fast, it can break something systemic, and then we might have a bigger problem on our hands. And something systemic could be like, what we had during the Lehman collapse back in the global financial crisis back in 2008, where the contagion threatened to spill into the banking system, and we were worried for a moment that our banks might not work. But more recently, we just saw a really good example of this just last week in the UK, when the Bank of England was forced to basically reverse its policy of tightening to try to control inflation, and it had to rescue the bond market there, which basically was in the process of meltdown, and it was going to take all of the UK pensions along with it.
Yeah, I mean, and that, again, that was a turning point for our markets here last week. I mean, I think, I don't know if it's like investors who are, they're still looking for the Fed pivot. As soon as there's some hint that things are going wrong, or that the Fed, the central banks, they assume that the Bank of England pivoted, that probably other banks will pivot. I don't know what it is, but all of a sudden, risk is on again. Last week, following the BOE's, I mean, gold has just taken off, and silver has taken off, and even more so. And, stocks, I mean, look at the market today again. It's just incredible. The Dow's up 790 points almost right now, and the rest of them. So this is what Powell is trying to fix, right? The notion that the Fed will always be there with easy money to bail people out as soon as things start to go south, bail equity holders out. This is what Powell is trying to cure.
Exactly. So what we're sort of seeing over the past 48 hours is evidence that the monster that the Fed created and is now trying to slay isn't dead yet, right? Where there's a couple of things that have gone on, to be honest here. One, things got pretty oversold in the markets. They were probably due for some sort of short-term bounce anyways. You had a lot of rebalancing at the end of Q3. Now funds can go out and buy again. But then, of course, we had, what happened last week with the Bank of England. And you're right, the market is taking bad news as good news, which is, this means that the Fed may actually have to go back to quantitative easing sooner than expected. So, hey, let's try to front run that, right? So the irony here is the stronger the market rallies, the more blue sky Powell has to keep on tightening. Yeah. Because as a lot of people are saying, and I personally believe this to be true, the Fed wants to tighten for as much as it can for as long as it can before it has to worry about financial instability. And if the markets are in rally mode, well, they're not broken. So the Fed doesn't have to worry about them. It gives it more leeway to actually be tighter and tougher. So by rallying here, the markets are actually pushing off the event that they're trying to anticipate.
That's kind of funny in a way. But not so funny is, how do we navigate this? I don't know. I mean, it's just, I think Alistair and Simon Hunt are of the belief that ultimately Powell will have to cave, that he will cave. In fact, Alistair sent me something. Well, this is a tweet from Alistair earlier today. Bear squeeze in everything recently shorted could be a turning point. Global banking system fragility encourages the Fed will soft pedal on rates to protect financial system over the dollar. That was John Law's choice in 1720. Total collapse of the currency ensued. End of quote from Alistair MacLeod. So that's his thinking, and I think Simon Hunt's thinking, and the two of them are working together on a paper I heard Simon Hunt tell you recently. Both of them believe that the currency alternative that's being put forth by Russia and China, I think they both believe that it will prevail and the U.S. dollar is in big trouble. But obviously there's, difference of opinion. This is one of the things that makes your show so important, I think, is that you do allow different ideas to be spread, to be put forth, and then people can make up their own minds. Where do you come down on this, Al? What I wanted to ask you, Adam, was the question you always start asking your guests, and I think in a way you've kind of answered it with the time we have. We only have my engineer says 2 minutes, so
okay. I can give you my 2-minute answer though to it if you like.
Okay, very good. Go ahead, do that.
All right. So, yeah, I do ask all my guests to sort of kick off the discussion. What's their current assessment of the global economy and financial markets? Here's mine in a nutshell from talking to perhaps as many people as Jay talks to as well.
Well, more than I have, I must say. You're just incredible. Yeah.
Well, collectively, we talk to a lot. Here's the Reader's Digest version.
Okay.
I don't want to have too much time to explain all this, but my confidence is high that we are headed into a global recession. Mm-hmm. I don't see any way that we avoid that. I think that we are currently, despite the rally of the past 48 hours, I think we're in a bear market that's playing out pretty much in the classic trajectory of a bear market, and we still have a fair ways to go until we find the bottom. Probably won't bottom until at some point in 2023. Mm-hmm. This is the bursting of the everything bubble that the central banks have blown over the past 12 years. So it's a downwards repricing of stocks, bonds, real estate. I think the jobs market is going to roll over. I think we're going to be sadly, going into a recession that's going to have millions of lost jobs along with it as well. So I think right now, as an investor, you are best served by being defensive. That's things like cash, short-term U.S. Treasuries, precious metals, and then maybe begin to dollar cost average into some of the assets that should do well when the market does bottom, or when the Fed is forced to pivot. I will say, Jay, most of the people that I interview kind of agree with the Simons and Alistairs out there that the central banks will be forced to pivot due to financial instability. And so those are things like long government bonds, hard asset producers, and good cash flowing, good dividend paying value stocks. Mm-hmm. So that's about as concise as I can be.
That's excellent. That's really wonderful. Thank you so much for those insights. And I think you summed it up very well. And I would just also mention, you interviewed Pedro da Costa, I think his name is. Is that right? Do I have that right? This morning?
Yes. He's the well-respected Fed journalist. Yeah.
Very, very good. And I would highly recommend people listen to that. And also your weekly interviews that you do also sort of sums up the week with
Lance Roberts?
Lance Roberts, thank you.
Those are a lot of fun.
I think the most practical guest that you have for investors on a regular basis is Lance Roberts. So I want to thank you so much, Adam, for taking the time. I know you're incredibly busy. I want to thank you also for the wonderful work that you're doing in helping people navigate these troubled waters. It's really great to have you.
It's been a pleasure, Jay, and I'm a big fan of yours as well.